The Dixon Technologies has entered into a pact with Vivo India. Puneet joins us to tell us why this could be important for the company. Puneet, explain it to us. Good morning.
Hi Neeraj, good morning. So very big pact now coming in because this is one of the last Android smartphone companies that Dixon didn't have a pact with for manufacturing their smartphones. So apart from that, they have formed, of course, a binding term sheet has been signed to form a joint venture, and this will undertake manufacturing of electronic devices, which will include smartphones as well. So while we await key details as well, apart from smartphones, what other things can they manufacture together in this particular joint venture will be key. Dixon is of course expected to have the higher share of 51% in the joint venture, and neither Dixon nor Vivo India will have any kind of equity stake in their own companies apart from this JV as well. So when you look at the transaction details as well that's mentioned in the press release, they have mentioned that a facility will be set up to undertake this kind of manufacturing, and it will also engage manufacturing for other OEMs as well. So they could increase the scope of the business going forward as well. That's what they mentioned in the press release. And why is this important? Because it consolidates the Android manufacturing space for someone like a Dixon. Now with addition of Vivo, they also manufacture smartphones for brands like Samsung, Oppo, Motorola, Xiaomi, Tecno, Itel, Infinix, Nothing, as well as Google Pixel, which they recently added right now. So it's a whole host of brands that they have manufacturing agreements with, and Vivo is the latest one addition to it. When you look at the revenue contribution specifically from the mobile segment, for H1 of FY25, so for the first 2 quarters, roughly 80% of the revenue came from the mobile segment. So that's what's driving the revenue as a growth, while margins have been lower, the 3 to 3.5 percentage point bracket range as well. Now, margins are set to increase as the company is looking to enter the component space of mobile manufacturing as well as other electronic devices. So it's expected to be better, and that's what they spoke to us also in a Know Your Company show. Starting Q2 26, they're also looking to enter the display manufacturing of mobiles, which is another key margin addition. So they've already started investing in the plant, and in the next 4 quarters it's expected to come on stream as well. That's another key thing to note. Finally, Nomura is saying that just this display and mobile manufacturing will give incremental revenues of 5 to 6,000 crores starting FY27, and they've also mentioned that Dixon will be liable to sell roughly 30% of all smartphones manufactured in the country. So it's a very big agreement for someone like a Dixon. The stock is very highly valued and still up 4% today, but the growth prospects and parameters keep going from one strength to another for this company.
Yes, indeed. Okay. Thanks, Puneet. Thanks for that. And for a stock which has been very active the whole of last week, I mean, just pull up the 5-year chart of Dixon and you will see what I'm talking about. It's actually gained another 4%. That is a seriously expensive stock, but what a mover. I mean, the last 5 years, as I can see, look at those gains for Dixon. This is what some stories are made up of. Okay, that's Dixon for you. Now